Alright, good afternoon. It's another wonderful day. This is Saviola Market Traders Academy, and in today's episode, we're gonna look at what we call the zone trading. With zone trading, is for you to determine the the pullbacks and then you trade them with no fears. Okay, so I would say the market doesn't have any special way to go all the time. It goes the same way. It's your ability to spot when market reverse and then or when market takes a newer direction. Okay, so when market picks a newer direction, you just trade according to the trend. Okay, this is one rule, that you don't trade against the trend. All right, so quickly let's go here. Over here, I'm assuming that market is moving up. Now let's look at this. I said this yesterday in my video, that anytime market is about to reverse, it either market form a double top. Let me use this, a double top, or a double bottom. All right, depending on the direction. When it's an upwards move, you must see an M for market to reverse, and then the same time, if it's a downward trend, for market to move upwards, you must see a double bottom. All right, so let's go here quickly. I take this as my double bottom here. So now I expect price to move against over this point, the inner leg of the W, up to somewhere here, and then next down to this zone. Okay, then I expect market to move up. Oh, come on. So now as price move down here, we expect price to move up, bypass this zone up here, come down for a retest. Okay, now up. So it's like this how market move. Okay, then finally for market to reverse, market forms an M. Okay, then reverse, bypass this zone down here, up, retest, down, up here. Okay, so now let's look at this. These are the areas. These are the areas. Here, then this one too here. Okay, and then here, and then if market move up to this zone, you expect to see this here. All right, so markets, this how market move. All right, this how market move. So how will you trade this? After you see a double bottom forming, okay, when you see market around this area, around this zone upwards, you don't enter. Okay, you wait for a pullback here to this zone. Okay, that's where you find a chance of entering. You get your reversal candlesticks, that is your either being a doji, either being head hammer, shooting star, or any any signal candlesticks, then you quickly enter from here buying to this zone. So here becomes your first take profit. All right, your first take profit here, because when price gets here, it's likely that price might might reverse. Now this is what happens to amateur traders. All right, those that trade the M and then the W a lot. All right, when price move up from here to here, down here, and then it moves where you pick your first take profit, what happens is market makers normally make false move around this area, giving you a fake M pattern, you thinking that market will reverse down. Though market will reverse for some few pips, and then all of a sudden you see a push up. Okay, so when you see something like that, immediately you see market closing above this zone. Okay, market closing somewhere here, it may be a candlestick closing above this zone. That gives you a strong signal that market will still move up, so you can enter from here as well. That is buying, and I call it aggressive entry. All right, but that is not good for you guys. So this is the appropriate zone for you to enter. From this zone, where market retests the inner leg of the W, moving upwards, and then for a lower low again to this angle over here, then you enter again, pick your first take profit here, and then your second take profit can be somewhere like 20 or 30 pip. So the same way applies to the reversal also. You see an M, then you wait for the pullback, you trade down here, you wait for the pullback here, this zone, and the market moves down in your favor. Now quickly let's go to the charts and then see if what I said is true. Okay, because everything that I say over here, we go to the charts and have a look at it. All right, so this GBP USD. So as I said yesterday, I'll begin with 50-minute charts. All right, 50-minute charts. I can start with from anywhere. Okay, so let's look at this for instance. As you can see, price moved up to this zone, but what happened before price take a newer direction? You see an M. Okay, before price take a newer direction, you see this, you see that, and this. All right, so you see this, that price moving lower, passing this zone. So as I was saying, price moved down here, bypassing the inner leg of the W. All right, so this gives you a confirmed signal that price is taking a newer direction. But before that, you have already done your technical analysis, knowing that okay, price is at a zone of reversing. Okay, so if you see that price is at a zone of reversing, then you just expect your M. All right, so after the second leg bypass the inner leg of the M, that gives you a strong confirmation that price is actually taking a newer direction. So what happened? You wait for a retest to this zone. Okay, you wait for a retest to the inner leg of the W, of the M, sorry. Here we go. So price move up here, okay, now what do we expect? You expect to enter the market selling from this zone down here, then you pick your first take profit, like I said over here, Is that right? Yeah, let's look at the point. This is about 60 pips. All right, so you quickly book your 60 pips profit. This is the reason why I say you should pick your first take profit here. Here we go. See a price take a newer direction again, back to the zone, but didn't what, bypass it, and then finally reversing down. So as you see, this is another strong confirmation for you that or this is another strong chance for you. As you can see, a doji here, and then a signal, a confirmation candlestick over here. All right, so you can enter the market selling from here again, and then you pick your first take profit here. All right, then this is an aggressive entry, price closing below your TP. That is it. Here is it. This zone, price closing below this, another aggressive entry for you. Okay, so what happened? You enter the market from here, you sell down to this zone. Okay, you sell, okay. Now, as I was saying, price move down here, up to this zone, price moving back here, and then we expect price to move down here, bypassing this zone, and truly price did. Now what happened here? We see a consolidation here. Okay, though we expect to see a pushback up here, which some way or the other you can find it here. You can see it somewhere here. Okay, you can see it here. Here we go. All right, now price move down, bypassing this zone down here. We expect a pushback, and price actually did. Here is it. Okay, come on. Now we expect another push down here, down, and here is it, another push up. Here we go, and let's measure it and see. Price actually did. All right, then over here you can see a consolidation here. As you can see, consolidation. So now Let's look at this. Perfect. So as price break, we expect a push back to this zone. Here, which actually happened. Here is it. Here we go. We expect a push back. Here is it. A push up again. Let's see something here. Wow, there is it. So you sell again. You comfortably sell again, bypassing this zone. You may pick your first take profit here, the second take profit down here. All right, so now what happened? You can see a W here, up here. So this is telling you that price is taking another a newer direction again. So you expect a pullback down to the inner leg of the W, which price did. Here we go, down here, a pushback bypassing this zone up here. All right, price pulling back, higher low, and here we go. All right, expect a pull up, so you buy. Your first take profit here. The first take profit here. The first take profit here. So as price close above, you can enter somewhere here. Then you target either 20 or 30 pips, and you are good to go. Okay. So now, as price break, you can see here price move down here. Okay, push up, push down. Now we expect price to come down here, which price did. A smaller one, but now instead of price to move up bypassing this zone, price reversed over here down to this zone, up to this zone. Okay, before finally going up. All right, now for price to reverse again, what happened? You see an M forming again, the inner leg coming close to the reversal coming close to the inner leg of the M. All right, okay, then price move down here, up, up here, okay, down, here, down, where is it, up and down. All right, so price has no other movement in the on the market. All right, all that they do is just to induce you to take your money away from you. So if you stay cool and then you follow the trend, the patterns, all that you need to know is the direction. You just don't have to trade against the trend. Okay, you just don't have to trade against the trend. Trading against the trend means you see price moving up. Okay, let me pick this side for instance. Let's say price is moving down or price is trending down. Okay, and then you are trading the pullbacks. Okay, you are trading the pullbacks. Let's say from here, all right, you enter, you see a reversal what candlestick here. This is a bullish engulfing, and then you decide to enter the market from here. You decide to enter the market from here, buying, though you may be in profit to this zone. All right, come on, you may be in profits over here, and let's see how many pips is that. This is about 35 pips. All right, 35 pips up. But what happens when you were enjoying your 35 pips? All of a sudden, within the next 50 minutes, market reverse against you, and then in 30 minutes your stop loss is being triggered. Or if you didn't place a stop loss, you'll now be sitting there hoping that, oh, let it get to maybe negative 10 pips or 4 pips, 5 pips, and I'll be out, where market will never come there, or for you to get a briefing space. All right, so it's always good you don't trade the pullbacks, but you rather what trade according to the trend of the market. All right, you trade according to the trend, you don't trade against the trend. I just show you how to trade against the trend. That one you need to look to have more experience in the market before you can what take this type of aggressive moves with some other indicators that can help you to take this kind of aggressive move. But with naked trading like this, you don't venture, you don't have to go in there. All right, so quickly let's go to another pair. Let's pick Euro USD, and this time we're gonna look at 1 hour chart. This is too much here. Okay, let me pick another one. Okay, let me pick this. Alright, there's another example here. This is a head and a shoulder, a perfect one here. So if you don't see a W or an M, you should expect a head and a shoulder. Okay, but when price is trending down or trending up, you don't expect to see a head and a shoulder. Those are fake moves. You don't expect to see either head and a shoulder or an M. All these are fake moves. All right, now what do we expect? We expect a pullback here, All right, we expect a pullback down here where price came down again to this zone. Okay, price moved up, came down again, but didn't break even this second shoulder of the pattern. All right, then price moved up. We expect a pullback here. Here is it. It's supposed to be here. All right, but price pushed down. How many pips? To trigger stop losses and then also trigger sell stop. All right, sell stops. This is 26 pips. Here is it, 26 pips down. All right, now we expect a move up. Here is it. We expect a move down here, but what happened? Price overtaking that zone down to this area, didn't break this previous low here. Okay, this tells you that traders are being trapped over here. All right, those that place their sell stop and then a selling order over here, price move down, you'll be in a trade thinking that, oh well, I'm in a negative, let it reverse, let me come out, at least book 1 pips or negative 1 pips, 5 pips, so that I'll be back, I'll be out of the market. All of a sudden you see that price reverse against you, and this is exactly what happened over here. All right, another head and a shoulder, taking a newer reversal. All right, as you can see, price still rally around this zone without bypassing it to this area. Okay, without coming to this zone. Okay, moved up, down, up, down. So over here you can see that at this angle price is just ranging. All right, price is just ranging, went up, came down, came down here, up, down. Let's look at this.
Naturally, not really, but it has a.
There is it. All right, so as price break above this zone,
yes,
you expect a pullback and then you buy. Okay,
or you were chipping in with another one also.
so you expect a pull up. Now let's look at this. This is a push up, a push down here, and then up here. What can we see here? You can see a bearish engulfing candlestick here, and then a hammer. Hammer is telling you that price will reverse down. So now let's look at the M and the W pattern traders. You may enter a trade from here. That goes to the aggressive traders, those that don't wait for confirmation. Immediately they see the signal, they enter. So someone might enter the trade from here, place stops around here. Let me see, from here it's about 18 pips or maybe 20 pips. All right, what happened? Price moved up, and then another bearish engulfing, and then another bearish engulfing, a bearish candle, and this is giving you a confirmation, a clear confirmation that price will what? Will reverse. That is if you are trading an M pattern. Okay, so as a good trader, you enter the market from here selling, thinking that price will go your way. All of a sudden, look at what happened. Within the next 30 minutes, you'll be in it. You think that, oh, at least let me book small profit and come out. Price will definitely come out, and immediately you enter, they will never give you any space of making any money. All of a sudden, they push the market away from you. And look at these long candlesticks up here. Within the next two candlesticks, your stop loss is being triggered. Okay, your stop loss is being triggered with these two candlesticks up here. Clear the board, take those people's out of the market, and then they go their way. They'll never come back to your zone. They'll never come back to your area. So this is what happened. That is why zone trading is the best option for you, which most traders don't know about. Okay, so you expect a pull up, down, expect a pull up again, and this is a perfect head and a shoulder here. All right, now we expect a push up, which happen, a push down, up here, now you expect price to move down here for another push up here, but with this impulse leg, that couldn't happen. All right, whenever you see any news, or this can be a news or any other thing, something like this, you don't expect price to move up to this zone again for you to enter. You just have to be vigilant, and this is the pullback. This is a pullback. Here came up to this zone this week over here. All right, and then a move down here. All right, I expect price to move up here, but didn't, went up. So assuming you enter a trade from here, where do you place your stop loss? You place your stop loss either above this zone here. So if price goes up to even this area, when price goes up closing above this zone somewhere here, then you can cancel your stop loss and then come out of the trade, because price might take a newer direction, coming down to this zone and then reversing up. But since price didn't break this area, but rather reverse over here, then your trade is still valid. But before that, if you enter a trade from here, you already book profits from here, your first take profit. So this become your your aggressive entry here. With the aggressive entry, you place your stop loss above this zone. Okay, it can be maybe 6 pips or 5 pips above. All right, So when price even move up here, your stop loss will not be triggered. Price reverse down again. Right. Price move down here, up. We expect price to come to this zone. All right. And then what happened? A W here. What happened? Over here, price didn't break this zone easily like that, but rather consolidated over here and finally breaking up, which form another M. But within this M there is a W in. So with forex, this is the movement. There is no any other special movement in forex. You don't expect to see any other thing apart from this in forex. So I'll pause here. Our next meeting will be, or my next video will be, on how to read the chart using the 4-hour and then the daily chart, and also the weekly chart, how to use the weekly chart to determine the trend of a change of a trade, and then also to know the change of a long-term trend. All right, so based on this, I'll pause here. Have a good day and a happy trading. Bye.